patron, take them away.
Okay guys, Big Scruff here. Kind of the last working day before Christmas. I wasn't really going to do anything today, but as usual I'm kind of goaded into it. And I'm going to flick on cable, have a little look at it, and see if I can build the trade up for you and show you how to do it. Alright. Now it's very simple. I have all my levels predetermined, as you can see. And if we shoot this out to the daily, you can kind of see it's been on an upward move, but it is now starting a downward move, potentially to here. Right. But that's the daily. But this day is pushing up. Now we can have sort of green candles in this move that can be quite substantial. So every time you add these red ones, it might be up, but those reds are nasty. So I'm kind of paying attention to that candle, all right? And it's sitting in between there and there, all right? So it's holding inside, all right? Let's drill this down a little bit. Well, what you can see there is a clear structure pushing down. And all this is, it just looks like a bit of a pullback and then a thumper to the downside. So if we go to the hourly, and you'll have seen me trading this yesterday into this zone, it's pushed away, but my belief is it is following down. You can see it. So what I'm going to do is I'm just going to put a fib on so we can see what the retracement is. So it got down as far as there. Well, it's come up, clocked the 61 and hitting the 50, which is now why I'm interested in it. Okay, so that's my area of attraction. And then you've got this bit up there. So there would have been orders all the way up, even into the 76. Just drop that in there. And then that gives me some good target points on the way in. Now this is just using a hourly. You've got a general direction of to the downside. So all you need to do is figure out why you're going to get in. How am I going to get in? Well, we drop it down to a 15 minutes so we can kind of see this in action as well. Well, you can see everything's respecting. So there's an order point just here. If you are coming down, but you could say, oh, well, look at that. That's moving up horrendously. It is. It is. But there's also movement within movement. And what that means is this might be pushing up, but the bigger version is down. Look, I'll go back to the hourly just to show you. You can see that's been down. You could see this is topping out, but I'm not a great lover of trend lines, but I'll put one on just to emphasize what I'm talking about. If we look at this here, point, working its way within kind of a channel. Okay, so let me just duplicate that. Pull that down. There you go. There's your channel. It's working it. All right. So it's been to the top, could push up a bit, but it looks like it's failing a little bit. But we've got another channel going this way. All right. So let me just drop a one on. Hello, my love. Thank you very much. She's a good girl there. She can come again. Got my coffee, because we all know Scruffy likes a coffee. And he loves it in his Forex mug. And if you want any Forex merchandise, check down in the description. You'll see a merch shelf and a link to Joanne's little shop. And all the proceeds pretty much go to a good cause. So happy days. She charges next to nought for it. There's a little bit of a pluggy promotion. Right, let's look at this. So, yes. It's respected that on that intersection and down. Now, like I say, I'm not a lover of trend lines, but I do like horizontals and fibs, and I've just shown you it was breaking that point. So if you bear with me half a second, I just want to check something. Fine, fine. So what we're going to do is we're just going to drop a quick order into this, because it's kind of at the point now. So we'll drop that there. Kaboom. Okay. So what I've done, I'm going to get rid of these trend lines as well, because I don't particularly like them that much. Let's get rid of that. Get rid of that. All right. Ideally, I want it up here. So I'm going to drop that under there and move this to a 5-minute chart. Oh, excuse me. Coughs. Obviously need me coffee, boys and girls. Need me coffee. Oh, that's better. That's better. So just push that back into the middle so you can see it. So normally at this point I'd be arsing about, because that's normally what I do. But I've been incredibly busy this week, and I've had to really concentrate on what I'm doing, which is kind of why I haven't. But I've also wanted to get these videos out relatively quickly so you can see them almost in the moment. Because what you're seeing is, well, it's live. I don't do rollback. What you see is what I see. Now, when you are doing something like this, you've got to be a bit careful. So I know that's my trigger point. So I'm just going to put that there. And we're kind of going to be working down here somewhere. All right. So just leave that there while I tell you what I'm doing. Now, at the moment, I'm looking to see if it's just going to slam down and trigger in. Now, the higher I can get that price up here, the better. All right. And that's what trailing behind the candles does. But you only trail away from your order. So my order's short. So I'm going to trail the opposite direction. And it just means every time there's a green candle printed, I'll put the order underneath it. So it has to come down and get it. But if the next green candle prints higher, move the order up. It means that the trade essentially doesn't have to work as hard. That's the idea behind it. Now, you can do one of two things. You can either expand the target point here. So each time it moves up, the target's getting wider. Or just have your fixed target and move it up so the chart doesn't have as hard to work. Now, at the moment where we are caught between this red zone and the green zone. If you're looking for stops, etc., it'd be the other side of that. Okay. Now, why I work zone to zone? As long as the price stays inside the zone, I'm happy with it. You know, and I'm happy to sit in heat, and I'll build up, and the order's just been triggered in there, and I'll build up the trade, and that way I get more bang for my buck. So what does that mean? Well, it just means I'll put another order here, and put one here, and put one here. So if it does come up, it'll trigger that and then roll over, or it'll go up there and roll over. And yeah, on the surface, it looks like you're adding into a losing trade, but I'm not, because I never go 100% to market on point of entry. I'll dip my toe in the water. Now, my account's big enough that even on a £5 a point, it'll pay me quite well. But I can go up to about £20, £25 quite safely. Why? Well, I've done this for years, guys. You know, it's my full-time income. My account to the retail trader is deemed to be quite large, but actually in the grand scheme of things, it's not. You know, it's not as big as you think it is. You know, yes, it is sizable. It's certainly bigger than what most trade with. But it's no different than if I was, say, trading a 15, 20,000 pound account or a 10,000 pound account. And I'm only on a pound, like £5 maximum. I would enter a pound, then another pound, and another pound, another pound, another pound. Build it up to the 5. But if I just dumped a £5 into the market and then tried to trade that, well, then I've got nowhere to go. I just have to weather the trade out, whether it's right, wrong, or indifferent. Got absolutely nowhere to go with it. And then what happens is, when it does go against you, then you're adding into a bad trade because you're already maxed out. So there's a bit of a difference. And maybe next year what I'll do is I'll set up a small account and I'll only trade it with a maximum of a £5. Drop it in the comments, see what you think. And the reason why I'll do that is so you're looking at the process rather than the money. You know, because I can have some good days. I can, well, I do 200 to 300 quid a day quite easily. But sometimes you get lost in the thought of thinking, oh, look at that. That's fabulous. You know, made 300 quid. Yeah, but I've got the asset to back it up. And what I've noticed is when I've done the small account challenges, and I've done quite a few where I've said, right, I'm going to fancy buying a telly. I'll dump 300 quid in an account or £200 in an account. And then I'll trade it up to sort of 600 quid and buy myself a telly with it. And you see it going. So I'm quite happy to do things like that. At the moment, I'm doing that share thing, trade the pool. That's out of my comfort zone at the moment. I've got till the end of January to complete that. So you guys tell me, what do you want for the coming year? And even if you're watching this year's time, still drop in the comments because I answer every single one of them. And I always take on board what you guys have to say. And if you message me, whether it's sort of email, WhatsApp, you find all those details below. I answer every one, and I'm trying to make this channel better, you know. And why? Well, I enjoy it. I love my job, and I like sort of interacting with you guys as well. But there we go. There's this triggered in 5 minutes, just while we having a little bit of a chatter and a chunter. And there it is. It's up to sort of 30 quid. So that's not bad. That's all right, eh? £30. So just keep an eye on it. Just watch it and see how it gets on. And what we'll do is we'll see if it gets to 50 quid. And then we'll kind of call this one a day because it is Friday before Christmas. And I pretty much want to be finished for lunch. And it's 5 to 12 now. So let this run out and I'll catch you in a bit. Okay, guys, I've killed it off because it's 1:15. There's a news announcement at 1:30, so I don't really want to be in amongst that lot. And also, I quite fancy having the afternoon off. So that's it. That's that job done. You saw me working yesterday, same chart. There's the rolling 24 hours. And as you can see, it's just dropped me another 50 quid for today. And I'm happy with that. Because one of the things with trading, and I get it all the time, and it's like it's why I was talking about the big money and one thing and another. Never focus on the money. If you're focusing on the money, you're always going to fail, because you'll over leverage your account, you'll chase every move, and you'll essentially just be playing a slot machine, and that's when things get a little bit haywire. But sometimes the markets don't move the way you want them to. They're not as fast, they're not as intuitive. Like today, the markets are really slow today. You know, they're just kind of plodding and grinding around. And if you get your 50 quid, well, fine, you got 50 quid. Whereas yesterday it was going like lightning, and I did 200 quid in 3 minutes. So it's all in relation to what you're seeing. Now, if you are going to embark on a trading career and it's what you genuinely want to do, make certain you know your craft, you know, and that means if you're inconsistent, in other words, you're winning a bit, you're losing more, you're winning a bit, you're losing more, but you're kind of treading water, you haven't really earned the right to start chasing the money. You've got to nail your process down. Now, over the course of next year, I mean, in the Scruffy Squad, there is the way of the scruff, the way that I trade. I'm going to spend more time with the guys in the squad, showing them how to read the charts, how to be intuitive with the charts. And hopefully that might come across. Because one thing I can tell you after over 15 years doing this, there is an old fable, and it's called the 390s. 90% of traders lose 90% of their money in 90 days. And that's like a industry-wide saying. And it's why when you see the brokerages, there's always a massive failure rate. There's a fourth 90. 90% of what you see and read is absolute bullshit. And why? Because it's wrought by people that don't do this for a job. I don't sell courses, guys. If you do a one-to-one with me, yes, I do charge for that, but that's because you're taking me away from my job, you know. And when I do a one-to-one, it might look to be a lot of money when you see the website, but in reality, it's not. But I lose because I can't trade before I do a one-to-one, and I can't trade after it. And the one-to-ones last anywhere from an hour to 2.5 hours, depending on what the chat goes like. It writes my day off, so it actually costs me money to do it, but I do it to help in a sort of roundabout way, and I only do 2 a month. But maybe I'm going to expand a little bit more on that, just to see if we can get you to where you need to be in 2023. I don't know, work in progress. But come to the squad, see what we do, come talk to us face to face in the morning calls, and you never know, you might actually get through it. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.